Each of you, within this sort of asset class, have sort of managed products for investors. People can go buy Bitcoin, right? In lots of different ways now. The number of ways that people can do that around the world is proliferated greatly. But you've built products that are for large investors, for people to invest through, in an equity market like fashion, or through electronic markets and so on. Maybe just for a second, Dan, just talk about the Bitcoin kind of funds, and you had a thesis then. How have they performed from that early stage?
Yeah, so we've just been trying to help individuals or institutions get exposure to the blockchain space. As you remember, back in 2011, 12, and 13, it was definitely more of a Wild West feel, right? Mt. Gox was the custodian of our industry. A lot of kind of, at least immature, incompetent behavior. And so we were trying to offer a very professional way for people to invest. And so our Bitcoin fund was the first thing on earth to have Ernst & Young audit it. All the normal law firms and things people would expect. And it's just allowing LPs to get invested in the blockchain space in a vehicle they know and understand. And we're still waiting for an ETF. That was 7 years ago. I still think we still have a good bit of time for that to come to our space. So we've set all of our products up as hedge funds because it's an easy way for accredited investors to invest in the space, either just crypto, either just Bitcoin or crypto generally, or venture.
Right. Michael?
Yeah, so I think we've taken a similar thesis, but a slightly different approach to Pantera. At Grayscale now, we've developed a suite of 10 investment products. 9 of them give investors the ability to gain exposure to a single digital currency. And then the 10th product is a diversified basket of large cap funds. Rather than going the hedge fund route, we have launched these primarily as trust structures. So similar to the way investors are used to gaining exposure to a commodity or a lot of other subsets of the market. And we've had a lot of success, as has Pantera, because even though our firms have come along and the space has come along over the last 7 years, buying Bitcoin still does not exist in the same places that investors are used to making investments in stocks and bonds and all the other things that they invest in. So by packaging up this exposure inside investment structures, we've really opened access to a lot of folks. So for us, we have an ongoing private placement. The Grayscale Bitcoin Trust now has north of 2% of the outstanding Bitcoin float inside the product. So if you're accredited, you can invest through the private placement. Non-accredited investors can participate and trade shares in the Bitcoin product on the public market here in the US under the symbol GBTC. And so it's been really rewarding. And again, I think anything that firms like Grayscale and Pantera, Circle, anyone that any of us can do to really remove those barriers to entry to make crypto access, avoiding the challenges of sourcing, storing, safekeeping, et cetera, is really helping to draw more capital and more interest into the asset class.
Yeah. I mean, it's matured immensely. Just sort of looking back over this arc of time from, say, 2013 to today, what's changed for either of you in your own thesis on Bitcoin? I mean, I think there's sort of these narratives, these memes, these sort of themes that have been there, and people have kind of, certain themes have ebbed and flowed. And, is there a dimension of this thesis where the conviction's even deeper than before? Maybe it's juxtaposition with where we are in the world today, or, I'd love to hear you both opine a little bit on kind of, how the thesis has evolved. And I think it's okay for a thesis to not be exactly the same at one point. There should be a thread that runs through it, of course, but how do you feel like that thesis has evolved in articulating this opportunity, to investors today?
I'll jump in. So I think it's actually two different pieces, Jeremy. I think the first is the thesis, and I think in tandem with that, it's also who is showing up around this thesis and what they're doing. So I remember back in 2014, 2015, we had a lot of family offices, a lot of kind of folks that were talking about Bitcoin and Silicon Valley and things like that, but it was still a pretty niche investment that most people were not willing to take that leap of faith into. There was a lot of pushback given there might not have been enough regulatory clarity for them. There might not have been enough of a track record around Bitcoin, only been introduced a couple of years prior to then. You really did not start to see much of that until, actually, I think for me, one of the turning points was Goldman Sachs investing in Circle. I think when you started to see that real institutional participation in digital currency related businesses, it provided a certain level of air cover that it was okay for other investors to get involved in the space. And so you quickly started to see people moving away from Bitcoin's a Ponzi scheme or it's only for criminals, and people really started to do their homework. And I think what's emerged now, probably over the last, call it 2.5+ years, is for now, two narratives. One that we really believe in and understand, the other that quite frankly drives us crazy. So the first is that Bitcoin should be viewed as a digital gold or a digital store of value, or perhaps a store of value for a world that's gone ever more digital. And maybe we need to start moving away from historical, stores of value, inflation hedges, et cetera. And when a lot of folks examine those overlapping attributes between assets like gold and Bitcoin, they really do start to see that Bitcoin can, on many fronts, really outshine gold. Now, as that has happened and really solidified in the investment community, there is this prevalent narrative that somehow Bitcoin is not a success because Jeremy, Dan, and Michael are not buying lattes with Bitcoin, and somehow that it has failed. And we think that that could not be further from the truth. This is an asset that didn't even exist 10, 12 years ago, and the amount of development that's gone on around it is truly astounding. So anytime you guys hear that, hopefully you dispel that just as much as we do. And I think in a similar fashion, as this thesis has developed, certainly our investor base has shifted ever more into institutional investors. And so we deal with a lot of hedge funds, registered investment advisors, pensions, endowments, and really started to see investors that have oftentimes much more stringent investment mandates really starting to make room in their portfolio allocations for digital currency, which has been super, super validating and really exciting from our perspective to see them getting involved.
Yeah, I mean, one comment, and I want to hear Dan's view on this evolution, but I think the sort of monetary policy of Bitcoin and the sort of this rapid inflation or distribution over these first 12+ years, and then this sort of long tail of steady state inflation, so to speak. I think some of the brightest minds who think about this over the long run, feel like, the amount of the monetary base needs to grow much, much, much larger into the trillions, and when the monetary base gets into the trillions, the ability to transact in this as a payment medium will really start to take hold. And obviously the utility value of layer 2 models and all the things that are evolving. We're still in the early stages of that, and I even had a view at one point on this that it might take 30 years to get to that point where it becomes a preferred medium of exchange as a global reserve asset as well. And that's okay. Like, you can have a thesis that's 30 years on this kind of stuff. You don't have to bet that next week it's used to buy lattes. Dan, I would love to hear how the thesis has evolved in your mind.
Yeah, it's a great question. I love the way you posed it. And I would even say, to some extent, what's changed? The answer is what hasn't changed. Bitcoin. It never changes, right? And that's why it's so powerful. And that's why people want to store $200 billion in it. And the gripe is, oh, it hasn't evolved, or it doesn't do this, or doesn't do that. And I'll say, it's an interesting, side thing we could talk about. But the thing that really makes Bitcoin appealing is it doesn't change. It's fixed, and it's been proven. It's 24/7 uptime for 11 years. It's never fallen over, never been hacked. And Swift gets hacked, Facebook goes down, like everything breaks, right? And that Bitcoin never breaks because it's built. The other thing that's never changed is it's never lost number one status. It's been number one for 11 years, right? Number two's changed a lot. It's XRP, Ethereum, Litecoin, everything cycles through. And all these things come and go, and Bitcoin's still 60% of the entire market cap of the entire industry. So if you're talking about evolution, there are some really cool things happening. Obviously, stable coins, a lot of smart contract things, DeFi, a lot of cool things happening. But there is a use case for the storage of wealth in a censorship-resistant thing, and Bitcoin's been doing that great.
Yeah.
And so it is fun. It's fun to hear. Like there are some people that thought Bitcoin was going to change everything overnight and do 1,000 different things. What it's doing really well.